Hello and welcome to the weekly commodity market update. I'm Brownfield anchor Will Robinson, joined as always by the University of Missouri's Ben Brown. Hey, Ben.
Good morning, Will. How are you?
I'm doing pretty well. It's a sunny day, and finally we're out of those 80, 90 degree temps, and now we're hitting 60s, 70s, maybe touching 80. So it's kind of
It's been beautiful this week so far here in Central Missouri.
Well, exactly, and really on that, and we might touch on this down the road, but we saw a lot of planting progress finally get through this past week, so that's a relief to the market. But just on the markets, can you give me an update? What have we seen changes from last week to now?
Yeah, for sure. So largely an increasing week across the board for commodity prices. Old crop corn for July was up 37 cents to $8.09. New crop corn in December up 55 cents to 7.65. Old crop soybeans in July up 71 to 16.56. New crop soybeans in November up 66 cents to $15.12. Looking at those different soybean components, soybean oil was up 3 cents, 3.25 cents per pound. Soybean meal was up $2.50 per short ton, and then new crop July wheat up $1.55 to 12.47.
So really a lot of adjustments on the positive side there with a lot of movement, watching the market go upward. What highlights did we see that really pushed the market forward?
Yeah. So a couple of big reports last week really kind of moved the needle for everything. U.S. ethanol production grew for the third week in a row, up 22,000 barrels per day to 991,000 barrels. It was a dismal week for export sales across the board for all commodities that came in well below the previous week's total. The WASDE report last week, or those World Ag and Supply and Demand estimates, showed a smaller corn crop, more exports for soybeans, and then the first iteration of new crop balance sheets for 2022-2023. Managed money traders sold off net futures and options positions across the board. Over the weekend, India, the seventh largest exporter of wheat, became the latest to impose protectionist policies and announce a ban on wheat exports. U.S. weekly ag export inspections were down for corn and grain sorghum, but up for soybeans and wheat week over week. The National Oilseed Processors Association showed that their members, which represent about 95% of the soybean crushed in the United States, crushed 169.8 million bushels in the month of April. That was on the very low end of trader expectations. And then finally, on Monday, we got the weekly crop progress report that showed 49% of the U.S. corn crop planted compared to 22% the week before and 78% last year. That was a gain of 27% week on week. And then winter wheat ratings declined just a little bit, even though we saw some rain in some key areas.
So really, that planting progress, hopefully that relaxed the market just a little bit and kind of relieve some farmer concerns. But today I want to start out real fast, recapping some of the WASDE report movements that we saw from last week. It didn't see a lot of adjustments necessarily as we might expect, but can you talk about the ones we did see?
Yeah, no, I consider the May WASDE report to be a top 4 or top 5 market moving report of the year, largely just because this is USDA's first iteration of the new crop balance sheets across the board. And so we got those estimates. The expectation always is that traders assume, or most people take into account, that USDA is going to take the prospective planted acres that was reported from farmers back in March, and then their trend adjusted yield that they release in February. That was not the case. And that was probably one of the big highlights in this report was USDA lowered in the month of May, the national corn average yield 4 bushels per acre down to 177. That was rare. It's happened before. I don't want to give the sense that it's happened before. In fact, the largest move in the month of May for the new crop yield was in 2013, a year very similar to where we were this year. So that was probably the big surprise. To me, when I look at the WASDE report and kind of break it down into the different sections, the average trade guess for that new crop balance sheet came in 8 million bushels lower than where USDA eventually came out. So they missed it by 8 million bushels. That might not sound a lot, but when you take into account that I don't think many of those trade estimates took into account a lower yield, that means that they missed the demand side by about 340 million bushels. So weaker demand in the WASDE report for that new crop corn. Now, keep in mind, this corn crop won't be finished marketing for another 18 months. So we've got a long way to go, but that was certainly a big surprise. And then just real quickly elsewhere, the winter wheat numbers for Kansas, Oklahoma, Colorado came in very low. We knew the winter wheat estimates were going to be low, but it came in at about 1.17 million bushels, billion bushels, which was well below where the trade had anticipated, about 500 million bushels lower than the trade had anticipated heading into the day. So those were the two big surprises.
So today, really, we're going to format this discussion just kind of giving highlights for each of the crops and or a recap of where they all stand. And so you just wrapped up with wheat, so let's keep the wheat conversation going right there. Wheat, it's a market that's tight and seemingly getting tighter by the week as we go. A lot of production concerns coming out of the U.S., but like you mentioned in your highlights, India is blocking exports now for their wheat products. What's that going to do to the overall market, just adding that pressure in there?
Yeah, no, good question. And I want to make a small correction. I think I said 500 million bushels lower than the trade. It was 100 million bushels lower than the trade anticipated. I don't know where my mind.
Trying to send shock and awe through the markets.
I did. I think I was looking at other things, and yeah. Okay, so back to wheat. So yes, so this is something that I think is bigger than just wheat. But certainly wheat is the crop that is going to take the biggest brunt of this as we move through the next couple of months or weeks. But this whole notion around protectionist policies, it's not something that we have used here in the United States to limit the flow of goods out of the country. Our philosophy is that we allow product to move to whoever has the highest dollar to spend, and that could be the export market. Other countries do not have that. And so it's an exacerbating wheel to where when one country puts protectionist policies on, it sends the price in all the other countries up, especially those exporting countries up. And it causes other people to consider protectionist policies as well. So India is the latest country to announce a ban. However, it seems to be a loose ban in the fact that they're still going to allow exports to countries that have a tender in place or a contract, which largely would be Egypt, along with a couple other countries. But certainly wheat being a major commodity in the global food system. So it's a very staple crop. Nearly everybody uses it, produces it, and consumes it. So therefore, it's an important crop when we think about the overall prices. Something worth noting, I think, here is in terms of countries, or at least the percent of calories consumed in the world that is currently under some type of protectionist policy, whether that be a ban, whether that be an export quota or an export tax. Over the weekend after India placed their ban, that percentage of worldwide calories grew to the highest percentage that we've seen in the last last 2 decades, basically exceeding the food crisis that we saw back in 2008. So kind of a big kind of threshold that it broke through on over the weekend.
So really a big marker there, just to reiterate where we sit right now within the market. Talking about wheat, being grown almost anywhere. I guess the old adage is somewhere in the world wheat is being harvested. Looking at Australia real quick, some of their expectations have been diminished there for their wheat production. So it really just seems like everywhere you look, the picture just keeps getting tighter. But I don't want to spend too much time just talking about wheat. Obviously, other commodities are seeing some adjustments as we move through this crop cycle. So corn, looking at demand globally, we've seen some diminished exports coming out of the U.S. and down export inspections the last 2 weeks. Can you give me an update? What's the picture on corn standing?
Yeah, no, it has been kind of a dismal couple of weeks for corn exports. For the report just released last Thursday, corn exports totaled 7.6 million bushels, and that was export sales well below the 42.2 million bushel average we've been seeing. So, very low export sales for corn. If you look at the actual shipments of the product, the most recent week of data we had, we saw about 41 million bushels of corn exported out of the country. That was down from 58 million the week before, and a 4-week rolling average of 59 million. So, pretty dismal. That was the slowest week that we had all the way since back in January, and something to need watching. We still, as we get ready to turn into the summer months here, we've got 15 weeks left in the marketing year, and we need to average somewhere around 53 million bushels per week. So this week at 40 million came in 13 million below what we need to average. Certainly we've seen, our traditional buyers of Korea, Japan, Mexico, and Colombia to buy, they're buying corn, they're importing US corn. I think that's what's notably absent is some of those major markets that we've kind of built expectations for. Sorry, I couldn't get that out. China being being one. They're still importing US corn, but they're not importing lots of US corn like what we had anticipated them seeing. So so some weak signals on the corn side for US exports, at least in the time being. If we look ahead and think about the outlook, one of our major competitors, South America, isn't out of the woods yet with some of their drought that they're seeing. So, if we look at the rainfall outlook for South America, especially for that second crop corn grown in central Brazil, limited expectation for precipitation through the rest of the month of May, and that crop is already struggling from some dryness. So potentially, as we get in the next couple of weeks, we could see some large flash sales of corn of countries looking to ensure that they have the product.
And then just one quick follow-up on that. And oftentimes when we look at the export-import picture, we talk about the value of the US dollar, but also looking at China's participation within the market. They're seeing a weakened currency with the yuan for the past several months. So how does that play a role in their buying power as potential importers of our products?
Yeah, good question. So exchange rates do matter, and certainly we've seen the US dollar be really strong, or relatively strong over the last couple of weeks. It came in at 104, which is, again, it's a ratio of the US dollar value against a basket of currencies. That was the highest value since November of 2002. So a relatively strong US dollar and then a weak Chinese currency makes our product more expensive relative to others, just because of the fact that our dollar. The other thing that happens here is that the price signals are moving in the wrong direction for Chinese consumers. And so, they can't buy as much, and the product's getting more expensive, so they'll buy less.
All right. And then winding down today's key conversations, we have soybeans, and we had the NOPA report that recently came out. That's the National Oilseed Processors Association. What highlights did you see from that report?
Yeah. So again, the National Oilseed Processors Association represents about 95% of the soybeans crushed in the United States. So it's a pretty good indicator of what we can expect when USDA releases their monthly crush report. So NOPA reported almost 170 million bushels crushed during the month of April. That was down from 181.8 million in March, but up from the April crush total a year ago. This was on the very low end of trader expectations. So most of the traders had anticipated a higher crush value. When we look at cumulative crush for the year, it's estimated 1.4 billion bushels for total crush for the year. That's 13.5 million bushels more than the same period last year. However, USDA is currently anticipating the current year crush to be about 74 million bushels, or 3.5% higher. So we've not saying we can't get there, but certainly the trend is that we won't reach USDA's current crush estimate, and they'll have to bring that down in the months ahead, largely because as we head into the summer months, it could be tight finding some soybeans in key areas. And then with transportation challenges that we've had, getting that product to a crush facility. So I do expect USDA to lower their soybean crush value in the next couple of months.
And then do you expect that to have a strong impact, one way or the other, within the soybean futures complex overall?
I think it'll largely get built in. I think it's now I think a lot of traders are already starting to adjust the smaller crush value into the expectations.
All right. Well, some key reports to watch coming up. We have export sales that comes out on Thursday. And then for the livestock side of folks there, cattle on feed report that comes out Friday. If you want more information on that, you can check out our counterparts by going to brownfieldagnews.com and watch the weekly livestock market update with Megan Grebner and Scott Brown, not Ben Brown. Ben Brown is over here with us on the crop side. All right. So Ben, as always, I appreciate your time this morning. I'm Will Robinson on Brownfield.